Are we seeing just a little bit of pain, or will the market crash? I have some technicals to share with you that I think you're going to find really interesting and working towards an answer to those questions. And so make sure that you check them out. And guys, make sure that you check out those links down in the description if you want to see how to support this channel, see my buys and sells, talk with my community, and also there's a technical analysis course down there as well. You can click on that, use the code word doctor. Let's get right into the technicals. We're going to start off with SPY. And so what we're looking at for SPY, let me reset the chart view, is we're looking at the climb that we've taken price-wise over the years with the S&P, and then more recently to about the end of 2018 and into, I guess, the beginning of 2018 until present, is that this rampant price rise that we've seen. And I want to draw your attention to the RSI on this, because this is something I talked about in my previous videos, that I talked about the bearish divergence that we're seeing. So if we actually go back to December 2017, which I mentioned at the beginning of 2018, that's where we had this peak in momentum as per the RSI on the monthly chart here. And you'll notice we've never returned back up to such a high momentum number like that one. So we were all the way up on the RSI at 89, almost 90. And then when we peaked out in August of 21, we were at 79.68. And then the more recent peak that we've gotten has been 72.45. So this decline in momentum and the rise in price sets up a massive bearish divergence, which, because this is a monthly chart, it doesn't tell us anything immediate. It doesn't tell us anything like, hey, tomorrow is the day that the stock market goes in the toilet. But bearish divergence is a pretty decent indicator. And I can tell you more specifically what we're looking at besides just some bearish divergence, something a little bit more intricate with the RSI that you may not have known. So make sure that you check this out. And I definitely don't hear a lot of people talking about it this way. And I think that maybe they should. So much like when we look at stock market charts with price action for higher highs, higher lows, and momentum when we're looking for lower highs and lower lows, that can indicate a further direction, that can give us that confirmation. We're looking at that, but instead of thinking about it in terms of price action, although it can translate that way, instead what we're thinking about it as is in terms of the momentum, and if we're looking for shifts in that momentum from bullish to bearish, for example. So something that we're looking at when we go back here to this peak that we had in December, let me see when that peak was. It was actually January 2018 to this next peak that we got in September of 2018. Now, mind you, those peaks were confirmed by the following month. That's what made them a peak, because we have to see that it's a high point, which means that you need a low point on either side of it. So same thing over here when we got to this other peak in September of 2018. So that was another peak in September, and it was confirmed by the time that we got to October. Now, the important thing about September to October is not only did it confirm a lower peak, but it also put in a lower low for us going into October of 2018. And you can see the drop that we had in that time. So that confirmation of a drop in momentum can indicate a shift in momentum is about to happen. So when we look at that price action wise, so what we need to look at here is what we had going into there's September, there's October that we have, and that's where that confirmed that shift in momentum. And check out what happened. We dropped fairly significantly going into December. Now, it doesn't look like much on this chart, but let me see if I can toss a measurement out here for you. So the closing price that we had here until we got to the closing price there, even down to the bottom of this thing, the market actually dropped 11.45% in 2 months. So say what you will, that's massive to watch that happen. So it, like I said, doesn't look like much, but remember, 11% in just 2 months' time, that's an ugly thing. Now, let's actually look over here and see what momentum has to tell us about the pandemic side of things, along with, like I said, what we see in the RSI. So if we go over here, actually, let's go over to these peaks that we have. So this is not the pandemic. This is post-pandemic. This is in August of 21, where we had this peak confirmed by what we saw in September of 21. Well, we ended up confirming a lower peak that we had here in October by the time November came around. November happened, that confirmed that as a lower peak, but notice we're still up above that previous low that we put in, and then December came along, and well, that was a higher peak, so momentum's still climbing, so the market still should be doing all right. But then when we got to January, we actually dropped down below this trough that we had in September of 21. So that confirmed that drop in momentum. So let's take a look at January of 2022 and look at the subsequent price action that followed. So let me move that down and that down. There we go. Because we really want to make this big on the charts for you, because I really want to make this impactful for you as well. So January 2022, this is where we got that confirmed momentum drop. And then look what happened following January. That's where we got that sell-off where we bottomed out all the way in October. So how much did we drop from that close in January? So that close is about there. And then we sold off down to the bottom of this, the very trough of this thing. We lost about, there we go, about over 20%. So between 21 and 22% from the close that we had in January of 2022 all the way until we got to November, which is where we saw the absolute bottom and then started turning around, because we did close higher than that. So if we actually went up to where we closed in November, it was higher, but from where we closed there to the very bottom, it was over 20% drop. And the RSI signaled that something was not quite all that right for us. So that's something that we can look at. So now let's go forward to present time and see where we find ourselves for the RSI. Well, look at our peaks. We actually have a higher peak right now than what we had previously. So that's still a rise in momentum. Now, what do we need to look for on the low side of this? Well, we want to make sure we're staying above the previous low that we had in April, and that low was about 64.35. If the RSI drops down below that, which right now it's at 68.91, but if it drops below that, if we lose that low, that is something that even though we have that higher high that's in there, that low it can still signal a drop in momentum. That can be a very painful thing to see that happen. And then if it continues to fall from there, if we continue to put in lower peaks following that, that can be further confirmation. So with the RSI, just that single indicator, that's one thing that we want to be watching for it to happen. We don't have that information yet. That confirmation on a monthly basis is just not there. But if it's a really yucky September, and it really tanks the momentum, if we really pull down hard in that one, that can be something that signals sooner than later that we see that happening, and then maybe it sets us up for a post-election rally. So let's go to the Qs to see whether or not it's unique to what we had for SPY. So when we go to what is happening with the Qs, check this out on the RSI here. Try and make that nice and big so you can see it on your screen. So here's the lowest low that we had most recently. Actually, that's the low point right there as well. We're already down below it. We had a little bit of pain. So we've already sold off somewhat as soon as we've confirmed that we went lower. And that confirmation is sort of happening right now. But the big low that we want to be watching for is this one back in April. Again, 64.86. And right now we are at 66.07. So we are not far below losing that low and really signaling we already have a lower peak here. But if we drop down below that low, we can probably see more pain coming up on a monthly basis anyway. And it doesn't have to be a sustained sell. We saw in 2018, it only lasted for 2 months. And so if that happens in September now, October, November, it could set us up still for that Santa rally coming in December, if that happens at all. Again, single indicator here, not anything that's going to be something that you can just sit on and rely on the whole time, but it is a fairly good predictor when we watch for this in terms of getting that drop that can signal that we really are losing momentum in a meaningful way. So going over to IWM, what do we see for the Russell 2000 ETF? Well, let me pop that up there for you and we'll look more presently. You can see that we had a locally high peak here, higher than all the rest that came before since we had last sold off. We have not put in a new low. The first low to really overtake in that one is at 55.52, so still in bullish territory. And right now, we're at 57.20, not too far above that. But if we drop down below that, we don't have to get south of 50. That can still be a signal to us that we're going to experience some more pain coming up. Now, mind you, if it does go down below 50, that's really where we start to get that heavier selling. And that goes for SPY, QQQ, and IWM, each of those ETFs that track their respective indices, the S&P 500, the Nasdaq 100, and the Russell 2000 stocks. Let's look at Nvidia, because everybody loves Nvidia. I love Nvidia. Long-term investor in Nvidia. Today was kind of ouchy. Thank goodness for short hedges. Let's pop that up there. Look what we have for Nvidia. We already have, as of this month, as of yesterday, we've confirmed that this is a peak so far. So if September keeps on selling on us and closes down lower, we've also blown through these previous 2 lows that we had in this over bought territory. The next low that we really need to look for significant pain after that is if we are to drop down below the 64.57, because then we get real and meaningful momentum decline there, and that can be something that can really be downward pressure on the stocks if we see that happen. So just something absolutely worth watching. And there's something else I want to share with you on each of these. I want to show you the Bollinger Bands as they are, and I think I have 2 standard deviations for everything except for Nvidia, because that one is just so it was so wildly popular and was just off to the races so much. So the S&P, these dark blue lines are the Bollinger Bands on here when you look at the price action, and you can see that we don't spend a lot of time outside of them. Sometimes we dance on the bottom, but not too often. We've actually danced along the top of this thing for a long time, with a few exceptions in there, because we've been very bullish with the S&P 500 for a very long time. So you'll notice anytime that we do go down this middle line here, which is the 20-period moving average, so the 20-month moving average, 2022 was a mess. We know that. We tagged that line again in October of 2023 and then ripped from there. So that would actually be a really nice place to sell off to. If we're going to sell off, that could be very good for us. But what I want to show you here is only 2.5% of the data actually make it outside of these blue lines to the top and 2.5% to the bottom. So 95% of the data is in between the blue lines for 2 standard deviations. For Nvidia, it's even more than that is in between the blue lines, because that's 3 standard deviations. So you don't even need to know what standard deviations are. It can help you to really do that interpretation, but that's what the indicators are for, to kind of help you so you don't have to do the raw calculations yourself. But the more you understand, the more you know, the more nuanced perspective you can have. So I'll put that out there for you. For the Qs, once again, if I reset the chart view here, and we're going to shrink down the RSI and what we have for the volume indicator, you'll notice once again, we don't spend a lot of time outside of here. We've been riding along the top of it for a long time once again. And so to revert back to the mean, so this beige line that you see going through here is something that's actually pretty typical to come back down towards that. And if we do, that can be a good buy signal. From where we sit right now, if we sold down to that 20-period moving average, we would actually catch this previous peak. That is also further support that would be there. What I look for is, okay, where are the sells coming in? When is it time to possibly toss out a few more shorts? We could be getting close to something like that. And not financial advice. These are my own opinions, my own thoughts, and you guys can toss it in with some of the due diligence that you do for your own buys and sells for your own purposes. So when I look at this, I look for those other opportunities as well. And I have a lot more technicals on here, but I have them hidden right now. You can go back and watch my other videos where I give price targets and stuff. This is more about looking more long-term and more general for what we have right now. So if we look at IWM, there's not a lot different here in terms of riding the top of that Bollinger Band, or riding the top Bollinger Band, however you want to say it. We're still riding along the top of it. We kind of peekaboo out sometimes, but for the most part, we stay within it. And, well, now we're coming back towards that mean a little bit, and you can see the Russell 2000 actually does that fairly often, or has done that fairly often. Even if we reset the chart view, you get a little bit more volatility here because it's the small caps. They're a lot more sensitive to high interest rates, for example. Also, inflationary pressures. They're just not as strong companies as what you would find in the Nasdaq 100 or in the S&P 500. And so that's why you get a little bit more volatility. Also, watch my other videos for Russell 2000 for IWM. Wonderful technicals here. For instance, this is this big price action that you see right here is fairly linear. It's all within a bull channel, and we happen to be sitting on top of it right now. So just to put that out there for you. So for Nvidia, now this is 3 standard deviations that we're looking at between the blue lines. So you're going to find more of your prices in here. 99.7% of the time, your prices are in between the blue lines. Only 0.15% of the time are you actually going to end up above it. And you'll notice that seems to be the thing that really shows us when Nvidia is about to turn around, because every time that we've gotten anywhere close, we've sold off a little bit. Now, mind you, we didn't turn around here. We sold off a little bit, closed a little lower, and then climbed back up some more when the price had a chance to settle a little bit. So can definitely happen. It doesn't mean bearish because you hit it, but it is something that can tell you that you're probably not the best time to go long, I think is what that's suggesting. Again, no financial advice to be found here. So guys, really be watching the RSI on a monthly basis. It'll take out some of that noise that you see. And I think that there's a lot of reason to be cautious out there with the different plays that we have, because I really feel like something is stirring up that within the next anywhere from a couple weeks to several months out, I would say anywhere between now and 3 to 6 months from now is really where you start to see, especially if the momentum continues to decline, it's probably going to unwind pretty quickly. So put up the RSI and set it up on the monthly charts and really watch for that, because I think that can be a big help for you, especially if we see that momentum decline and it continues to decline from where it's at. Then we could start to see an accelerated sell, and that could set up for significant buying opportunities down the road, at least for myself. In my own opinion, that's what I'm looking for, and I wanted to share it with you guys. Guys, if you want to see more of my technicals before they hit YouTube, the link for the Patreon's down in the description. Click that, sign up, and head on over to the Discord. My buys and sells and my community members are also over there in Discord. Come on over, welcome, and we can't wait to see you there. If you guys want to learn to do technical analysis like I do and really empower your portfolio through technical analysis trading, there's a link for that down in the description as well. Click on that. It is Stockmo Academy. It will teach you about the bread recipe, tells you how to set it up. It tells you a whole lot more about technical analysis. It's just, it's wonderfully built, small, easy, digestible pieces. I have a chapter in there introducing some things about options, and it's just a great course. You can use the code word Dr. DOCTOR. That's also in the description as well, the link and the code, just in case you forgot it. So when you sign up, use that, you'll get a massive discount. Guys, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.